the Toronto Real Estate Board just dropped their 2026 market outlook and year in review, as well as their forecast for both prices and sales for 2026. And in it, they also did a study with MIT on the multiplex zoning reform, which is of interest to me. I'm going to quickly go through that, and I'm going to do another whole video on the multiplex stuff. And while I'm talking about multiplexes, we're hosting 4 multiplex events across Canada this year, starting in Vancouver on April 8th, sponsored by CMHC and Van City. And we're also going to be dropping our super early bird tickets for the Toronto Multiplex event, which sells out every year. Last year, we had over 300 people. That's going to be in September this year. So click the link. Anyway, TREB came out with a report. It's obviously bullish. They are optimistic that sales are going to recover, prices are going to recover. I don't necessarily agree with them, and I'll go through a couple of reasons why, but I don't want to dunk on them too hard. And I actually like what they did with this multiplex thing, so I want to give them credit where it's due. They hired MIT to study it. I think this is becoming a popular thing in the US as well as a solution to their potential housing crisis. So the multiplex stuff they did was pretty cool. The market outlook that follows, I'm far less convinced. But anyway, let's get into it. And it probably shouldn't be a surprise that I'm not exceptionally fond of housing market forecasting at all. Forecasts tend to lean optimistic. They struggle with regime shifts, and they rarely survive macro shocks. But this part of the report is different. It's kind of unique. I haven't really seen them do something like this. TREB brought in MIT to study Toronto's multiplex zoning reform. They tested real parcels, real constraints, real economics, and the findings are pretty credible. And I'm going to do a whole other video on that, so make sure you subscribe to the channel for that. Don't miss it. Where I struggle, where I part ways with the work that they've done here is with what comes next. So TREB lays out a fairly constructive outlook for 2026. They talk about sales recovery, they talk about price stability, they talk about a gradual normalization. And price aside, because I never really thought prices were going to go up this year, but sales, I originally thought that would have been the case, that we would have seen a small increase in sales here. And maybe they started writing the report. They probably started writing the report before they had January's data. But between the escalating trade tensions, weakening economy, and the fact that we're already running 20% below last year on sales, I think 2026 is shaping up to be worse than 2025. And a lot of realtors were saying, oh, it's just because of snowfall. There was so much snow in January, that's why. And so my boy, Rob Marsiglio, who is amazing, and you should follow him on YouTube, and I'll try and remember to put the link in the notes. He did a chart on 10 years of winter sales and snowfall, and there's basically no correlation. So anyway, again, my forecast, and this has changed, I'm willing to admit, I think the sign of a strong mind is its ability to change. This time last year, well, even middle of last year, I would have felt that 26 probably would have given us more sales than 25 in the GTA. I think nationally we'll probably see more sales in 26 than 25. So that's Canada-wide. But in the GTA, on the Toronto Real Estate Board, I think 26 is shaping up to be worse than 25. Let me show you why. But before we do that, if you like housing analysis that separates good research from optimistic narratives, hit the subscribe button. Now, again, I'm going to start off giving credit where it's due. The multiplex research is the strongest part of this report. The estimated near-term impact on sales is just 1 or 2%. And I was never using this as a bull case. I think it's a good opportunity for people who want to invest, who are add value, who want exposure to 416 real estate in a way that they can get add value, supply creation, CMHC, MLI select financing. They acknowledge that this is a big policy change and it's had a very small short-term impact. It doesn't mean that multiplex zoning failed. It means that housing supply responds slowly to policy when costs, financing, and risk remain high. And that's a really strong reflection of the market that we're in right now. And I think an indication that when you can bring forward this policy change that actually makes a type of 416 product a much better investment, and there's still not a significant enough bid to improve the absorption or bring prices up on that. Because hypothetically adding output value to a property, the number of units that you can develop on it, should improve the input value, the land, but it hasn't. And that's a reflection of how weak our market is right now. And the fact, and weak, just not just on price fundamentals, you can't even really develop something to positive cash on cash return in a lot of cases because prices are too high. but also sentiment. Like people just aren't in, like the investment market is pretty much no bid, right? Now, Multiplex feasibility notes that this is long cycle policy, right? That it changes future optionality. It changes exit strategies. It slowly reshapes land economics. It doesn't rescue a weak market. And this distinction matters a lot when we evaluate the rest of TREB's report. So let's get to that. To be fair, here is their bull case, okay? Their bull case is that borrowing costs stabilize, confidence improves, first-time buyers re-enter the market, sales recover, prices remain range-bound, but grow a little bit. They have the average price forecast here between 1 and 1.03 million. Now, keep in mind, and I did cover this in the last report for January TREB data, is that the average price now is below $1 million. So again, I'll give them the benefit of the doubt that they had already done this research before they saw that data point. But as it stands, they're sort of forecasting a price increase based on what prices are at right now in January. However, they do say here that they expect year-over-year price declines in the mid to high single digits will be the norm for the first half of the year, provided consumer confidence improves in the second half of the year. Increased sales and tighter market conditions could result in a leveling off of selling prices. So continued declines in the first half of the year, flat toward the end of the year. You could see that happen just from data, just from base effect, which basically just means that, like, you know, you can compare data points from a high or low base and it would completely change what the growth is. Now, price aside, like, because I'm of the opinion that prices will probably fall, but they also forecast that sales are going to increase. Okay. So they forecast that, you know, in 2025, we had about 60,000 sales, 62,000 sales. And this year they expect 70,000 sales. Okay. And I also felt this way about this time last year and for much of the tail end of last year, because I felt as house prices got cheaper, you'd see more participants able to afford houses and they would continue to enter the market. But I've changed my mind. And the reason why is because we're already about 20% below last year on sales, which you can see in this chart here. 2026 is below 2025 and all of the past couple of years. It's even below year 2023, which was brutal in January. And if I go all the way back, so we know that 2025 was one of the worst years ever for real estate. Okay. You'd have to go back to the 1990s to find a worse year for number of sales. And so I'm going to go back 15 years because that's all I have in my data set here. But if I do that, you can see this purple dot here. It's kind of hard to see, obviously, but where the arrow's pointing there. We just had the slowest start to the year for real estate in the GTA in at least 15 years. So we are, as it stands right now, heading for, you know, or we're on trend to have a worse year than last year. And, you know, people can blame the snow, whatever. I don't do what you're going to do. I think that this tells me that coming out of the gate, we're not creating a confident real estate market heading into 2026. Trade tensions have escalated. If we're going to continue blaming that, we have to acknowledge that trade tensions have escalated. We're heading into the Kuzma review. Bank of Canada just dropped a huge piece of their monetary policy report on the Kuzma review. Business investment slowing, employment growth is weakening, which I've covered in a recent video. Consumer confidence is rolling over. Housing does not lead in environments like this. When macro conditions deteriorate, housing forecasts don't get revised fast enough. And for sales to recover meaningfully in 2026, we would need a material improvement in economic conditions. And right now, the opposite is happening. Now, they also bring in population growth, right? They talk about how population growth still supports long-term demand. But we also can see here massive outflows of people from Toronto and Peel, even York region in the last little bit. And so using population growth as a bull case, like demand does not automatically convert into transactions when affordability is stretched and job security weakens, even if it was a bull case, which I don't think it is, because a record number of Ontarians emigrated from Ontario in Q3 of last year, which is the most recent data point we have. And Ontario just recorded a record outflow of non-permanent residents. So we have more people leaving, Canadians leaving, and non-Canadians leaving than we've ever had in history. Household formation, even if we saw it ramp back up, it could stay strong while sales fall. And that is exactly what we're seeing. Now, they talk about first-time buyers here as well, and first-time buyer intentions and an Ipso report, which I've mentioned already on the channel. Yes, first-time buyer intentions improve, but intentions are not transactions. I intend on buying real estate in 2026 if I can get an amazing deal. These buyers are cautious. They are payment constrained. They are typically more entry-level careers, so they're way more vulnerable to things like AI, things like layoffs, things like economic contraction. And many of them are waiting for economic clarity that has not arrived. And they talk about how rentals are tight, but rentals are tight because people aren't buying. They mention this rental affordability gap, and it's not bullish for ownership, right? I've talked about this a couple of times when I bring up National Bank Housing Affordability Monitor, because there's a pretty clear historic correlation between rental prices and house prices. And as it stands right now, if your rental market's ripping, it's because of this massive gap between house prices and rental prices, where it's so much more economically compelling to rent than own. It's less economically compelling than it was at some of these peaks here in the unaffordability. But if you look at the historic trend in this is your monthly buying comparing to renting for like a 2-bedroom condo in Toronto. The only difference really is the down payment. And so the economics of being a renter being way better than being an owner, especially like if you're a renter, if one of your friends bought a house in 2021, and maybe even that's a bad example because it's like obviously really extreme, but if one of your friends bought a house in 2021 for $1 million and they just lost $200K and you rented for 5 years, and you guys had the same amount of money at the beginning and you put all your money in like index funds or dividend stocks, or you YOLO'd it into some other stocks, or just put it in SPX, you would have way better wealth than them. You could pick any time in the last 10 years and that actually probably would be the case. But most people don't. Most people prefer homeownership because we're not good at saving money in Canada and we're not good at investing money as Canadians, or most people just suck at investing. But people are stuck renting longer because the jump to homeownership still doesn't work financially, or maybe not stuck, but they're choosing to rent longer because it doesn't make sense. Now, the GTA continues to lose residents to other regions, which they mention in the out-migration here. And this is because housing costs are too high, commute times are too bad, infrastructure is too strained. These are slow-moving headwinds that do not reverse in a single forecast year. And I will give TREB credit where it's due. This and crime and a lot of other things, they've been good at putting policy pressure on provincial and federal government for certain issues that I would say do interact with housing in some of these studies that they put out. So this report contains two very different things from my perspective. It contains excellent policy research on multiplex zoning, and it contains an optimistic market outlook that assumes improving conditions. I buy their research. I like the research. I don't buy their forecast. I mean, I guess they do say prices are probably going to fall a little bit and sales are going to tick up slightly, like just over 10%. I just don't know if I see that happening anymore. I wish that I did, because, the industry really needs some growth, but given trade tensions, a weakening economy, and sales already running well below last year, I think 2026 is more likely to underperform 2025 than rebound from it. Multiplex zoning obviously going to help in the long run, and if you've been following my channel, this is something that I'm very passionate about, and I really like the product type. I put a lot of my own money in this type of product all over the country, not just in the GTA, because the GTA, the margins and returns are not exceptional, although I think they will be at some point. But the market in the near term is still under pressure. So anyway, hit the subscribe button if you want more clear-eyed housing analysis, and if you want to learn how to operate in this environment, grab the super early bird tickets to the multiplex events that I mentioned. Let me leave you with a question, as I always try to, and I try my best to read and respond to all the comments. Do you think that housing sales recover in 2026? Will sales be higher in 2026 or lower in 2026 than they were last year? Let me know what you think. Thanks a lot for taking the time to watch and comment, and I'll see you again as soon as I can.